So my first video, I was talking about the interesting thing about Forex, which is forecasting or betting if the price goes up or down. So sometimes you need to know in relation to this long and short, bullish and bearish. So what is bullish? Bullish is the name of a market that is going up. So if someone say they are bullish on Euro USD, that doesn't mean that Euro USD is going up now, but they think that Euro USD is going to go up. And what is bearish? Bearish is the opposite of bullish, which is for the market that's going down. So if someone say they are bearish, that means they think that the market is going to go down. Now, what is long? Long is another word for buy, and the long position is a buy trade. So if a trader thinks that the market is going to go up, they will enter for a long position, or they will say they are long on Euro USD. Short is the opposite, and short is another name for sell. So if someone say they're entering for a short position, that means they think that the market is going down. So they'll enter a short position. So long and bullish are buy, short and bearish are sell. So to make money, all we need to do is to find a market that is trending either up or down, then get into the trade. And to clarify, a trend is a phase in the market where we're either going up or down, anywhere but sideways. So we have uptrend, downtrend, and consolidations. An uptrend is when the market is making higher highs and higher lows. And a downtrend is when the market is making lower highs and lower lows. And a consolidation is when the market is neither moving up or down, just moving sideways. So remember, higher high, higher low, uptrend, lower high, lower low, downtrend. And because the market is so flexible, you don't have to bet on a trade for months or years. You can get into a buy trade when it's going up, and if the market reverses, you can simply get out and go short and profit from the down move as well. Now, what is a pip? We measure price move that the currency makes in pips. And the currency I showed you on my first video are made of pips. That's what makes up the currency pair. So Euro USD is 1.08538. The 3 is 1 pip. The 5 is 10 pip. The 8 is 100 pips. And the 0 is 1000 pips. So if you notice, we leave the final number. That's because it's a fraction. So when counting pips, we start with one number from the left, always ignoring the fraction. Now listen very carefully, because counting pips become very important when it comes to pairing trade and managing risk. So don't worry if it's getting a bit confused now, because this app made it very easy. And I will be explaining more about it in my upcoming videos, so you don't have to keep counting a bunch of numbers. So now I'll be talking about spread, swap, and commission. But first, I want to tell you that trading was not supposed to be like this. It was supposed to be we go to the bank and execute our trades. But come to think of it, if I go to the bank and you go to the bank and everybody goes to the bank to execute their trade, that will be very stressful and rowdy, and the bank may not even allow us to enter. That is why we have a broker. And a broker is a middleman that will help you execute your trade. And they will charge you through spread, swap, or commission. So remember, spread is the money they charge you to enter for a trade. Swap fee is the money they charge you if you hold the trade till the next day. So you're trading and you hold the trade to the next day, they'll charge you just a tiny fee. But you don't have to worry about spread and swap fee too much if you're trading with a good broker. So the broker I will recommend for you is Exness. That's the broker I use because they have tight spread and low commissions. Now, what is a stop loss? A stop loss is another kind of order and the most important of all. So the harsh truth about Forex is that you can't win every trade. But the good news is that you can cut your losses short. That is the meaning of stop loss. It's an order that will automatically close your trade at a loss if price reaches that level. A stop loss is important on every trade, so you don't have to sit and watch your money disappear to God knows where. Now, what is a take profit? Well, a take profit is the opposite of a stop loss. Here is an example. Your entry is here, your stop loss is here, and your take profit is here. So if the market goes down to your stop loss, you'll be closed with $1,000 loss. But if the market goes up to your take profit, you'll be closed for a $5,000 profit. Using stop loss and take profit is how we do the risk management and ensure we win long term. So what is a lot size? So I'm going to make it very easy by hitting the nail on the head. Sorry, by hitting the head on the nail. What am I even saying? Just hit whatever you want to hit. Now back to business. When it comes to lot size, it's advisable to risk 1% of your account. So this means if you're trading with $100 in your trading account, you have to use a 0.01 lot size. So if you're trading with such amount or less, use a 0.01 lot size. So in a vivid explanation, if you use a 0.01 lot size with a 10 pip stop loss, you will lose $1 when you lose, and you'll make $3 to $5 when you win. So this is risk management, and it's important we follow this step to avoid unnecessary loss. So all of this I just said are the basics of Forex you need to know as a beginner. So for you to start trading, you need to start with a demo account. This means trading with fake money. So you can practice with fake accounts so you can't lose money, but you can't make money neither. So you might be asking, how can I become rich by just making $5 in $100 account, which I don't even have $100 to start with? Now, this is where prop firm comes in. A prop firm is a company that will give you access to a $10,000, $100,000, or even $1,000,000 account to trade if you can prove that you can trade. So you have to go through an evaluation process. That means like they're testing you where you trade with fake money and you just have to make small profits without breaking drawdown limits. So if you can do this, they'll give you the $100,000 account or more. And when you profit, you have to keep 80 to 90% profit to yourself. So to get a profit account are super cheap, from $50 to $100. And they might even give you a huge discount. So in my next video, I'll be talking about these 4 apps you need to install on your phone so you can start trading. I also have a Telegram channel where I share free trading signal. So click the link in the description of this video to join my free signal group on Telegram. And don't forget to like and subscribe to this channel so you receive a notification on your phone anytime I upload a new video. And I'll catch you in the next one.